Welcome to the Capri Global Capital Limited Q3FY25 earnings conference call hosted by Go India Advisors. As a reminder, all participant lines will remain in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star, then 0 on your touch-tone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Hardik Doshi from Capri Global Capital Limited. Thank you, and over to you, sir.
Earnings call for Capri Global Capital Limited. This is Hardik Doshi, Head Corporate Finance and Investor Relations. As a brief disclaimer, the discussion on today's call regarding Capri Global Capital Limited's earnings performance will be based on judgments derived from the declared results and information regarding business opportunities available to company at this time. The company's performance is subject to risks, uncertainties, and assumptions that could cause results to differ materially in future. Given these uncertainties and other factors, participants on today's call may observe due caution while interpreting the results. The full disclaimer is available on the slide 42 of the earnings presentation. Participants are requested to take note of the same. Let me now introduce the participants on the call. With us today on the call, we have Mr. Rajesh Sharma, Managing Director of the company, Mr. Partha Chakrabarty, Chief Financial Officer, Mr. Sanjeev Srivastava, Chief Risk Officer, Ms. Divya, Director Business Strategy, Rajni Singhvi, Financial Controller. I now request our Managing Director, Mr. Rajesh Sharma, to present the opening remarks. Thank you, and over to you, sir.
Good morning, everyone, and I hope you all are doing very well. We declared our unaudited financial results for Q3FY25 on 23rd Jan 2025, and I hope you had a chance to go through the earning presentation, which is available on our website. As you all know, we continue to serve under-penetrated and unbanked customers in high-growth segments with substantial untapped market potential, while maintaining a strategic focus on building a retail franchise with secured loan book. We are a diversified NBFC with presence in MSME loans, housing loan, gold loan, construction finance. We continue to further diversify ourselves by expanding our product offering. In the last quarter, under our MSME loan segment, we launched MicroLab, a small ticket secured loan product for self-employed customers, and launched rooftop solar loans. In addition to growing our interest income, we are also focusing on increasing share of fee income through insurance distribution and car loan originations. We continue to invest in technology as we believe that our digital-first approach and superior technological processes will be the key differentiator, enabling us to serve our customers better and faster than our peers. I shall now move to the commentary on business and earning performance. Please refer slide 3, 4, 5, and 6. We maintained strong growth momentum in 3QFY25 with our AUM reaching rupees 20,663 crores, an increase of 54.6% year-on-year. This growth was primarily driven by a growth of 196% year-on-year in gold loans and 31% in housing loans. In addition, our MicroLab segment has already touched AUM of 157 crore in 2 quarters. Our disbursement touched rupees 5,839 crore during the quarter, reflecting a 52% year-on-year growth. Our retail AUM constitutes over 80% of our portfolio. Our co-lending AUM continued to surge during 3QFY25 and stood at rupees 3,681 crore, comprising 17.8% of AUM compared to 8.9% in Q3FY24. We have further strengthened our relationship with 9 bank partners, increased co-lending lines, and the acceptance ratio of the loans compared to a year ago. We expect to continue this momentum in co-lending as an efficient tool for high ROE accretion and liability management. We continue to build well-diversified portfolio for our MSME and housing loans with average ticket size of rupees 20 lakhs. Our MSME AUM, including MicroLab loans, reached rupees 4,926 crore, up by 4% year-on-year, and our housing loan segment AUM reached rupees 4,586 crore, up by 31% year-on-year. MSME and housing finance together continue to constitute 50% of our overall AUM. With our plans to open new branches for these segments and focus on underserved market, we are confident that our MSME and housing loan portfolios will deliver robust and sustainable growth in the coming quarters. Our gold loan AUM increased by 196% year-on-year to cross rupees 7,092 crores, supported by our extensive gold loan branch network of 776 branches across 9 states and union territories. These branches are scaling up and have achieved a productivity level of rupees 9.1 crore AUM per branch, with over 65% branches having reached the vintage of more than 5 crore AUM per branch. We are confident that our expanding reach and co-lending partnership will continue to fuel sustainable growth and further strengthen our position in the gold loan segment. Our construction finance AUM increased by 65% year-on-year to cross rupees 3,742 crores, driven by strong demand in real estate sector and pipeline of new affordable housing projects. Our disbursements in construction finance for Q3FY25 stood at rupees 822 crore, up 51% year-on-year. We continue to maintain a granular book in our construction finance segment with over 287 projects and average portfolio ticket size of rupees 13 crore. In construction finance, our focus will remain on residential projects within the affordable housing sector and smaller projects. Now, as regards earning performance, let me now provide an update on our core earnings. Our yields and spreads expanded further in the quarter to 16.7% and 7.3% respectively, primarily on account of increase in yields for housing finance to 12.9% and gold loan to 20.6%. Our net interest income for third quarter FY25 reached rupees 347 crore, marking a 42% year-on-year increase, and for 9 months FY25 reached at 953 crore, marking a 30% year-on-year increase driven by margin expansion and robust growth in our loan book. We continue to focus on non-interest income, with its share in total income at 25.1% in 9 months FY25. Our non-interest income comprises of 3 components: car loan distribution fees, co-lending income, and insurance income. Our non-interest income was rupees 319 crore in 9 months FY25, up by 20% year-on-year, supported by co-lending fee income of rupees 112 crores. Net car loan origination fee of rupees 72 crore and net fee income from insurance of rupees 39 crore. We have scaled our car loan origination network within a very short period and now a meaningful player in this segment with pan-India presence of across 811 locations in 31 states and union territories and 12 partner banks and financial institutions. Our car loan origination in third quarter FY25 was rupees 2,972 crore, up by 16% quarter-on-quarter and 5% year-on-year. On the insurance distribution front, we are tied up with 18 insurance companies and expected to generate more than 60 crore of net fee income for FY25. We anticipate this strong foundation will sustain the impressive growth trajectory of our non-interest income. As a result, our total income for third quarter FY25 was up by 30% year-on-year and 9 months FY25 up by 28% year-on-year. Our branch network expanded to 1,066 branches in third quarter FY25 and employee base increased to 11,022, up by 13% year-on-year. We opened 70 new branches exclusively for our micro-LAP segment. Following our significant investment in branch expansion over past 3 years, we are now focusing on bringing more efficiency and productivity, effect of which has already started to reflect in our cost-income ratio, which improved to 58.3% in third quarter FY25, down from 64.3% in second quarter FY25 and down from the peak of 17.5% in fourth quarter FY24. We expect further reduction as we see benefits of operating leverage accrue in coming quarters. As a result, our pre-provisioning operating profit increased significantly to rupees 189 crores for third quarter FY25 and rupees 480 crore for 9-month FY25, up by 46% year-on-year and 39% year-on-year respectively. As regards asset quality, our credit cost for third quarter FY25 was at rupees 18 crore, a modest increase of 4.8% quarter-on-quarter, whereas for 9-month FY25 it declined by 6.5% year-on-year and was rupees 82 crore rupees, which translates to 0.7% of loan book. Gross stage 3 ratio stood at 1.7% and net stage 3 ratio stood at 1% in third quarter FY25, an improvement of 40 basis year-on-year in both. We continue to maintain healthy PCR on stage 3 loans of 39.4% in third quarter FY25. As regards capital adequacy and liquidity position, we continue to maintain a strong liquidity position of more than rupees 2,000 crore through cash and cash equivalent and undrawn credit lines across CGCL and CGHFL. During third quarter FY25, we got new credit lines of rupees 1,025 crore sanctioned for CGCL and CGHFL. Our capital adequacy ratio for both CGCL and CGHFL remains strong and stood at 22.9 and 29.3 respectively. As regards profitability, our efforts over past 2-3 years to diversify our business and income stream is now yielding results, as seen in third quarter FY25 performance. Our consolidated net profit saw strong increase and stood at rupees 128 crore rupees for third quarter FY25, up by 88% year-on-year and 32% quarter-on-quarter, whereas our profit for 9 months FY25 stood at rupees 301 crore, up by 53% year-on-year. We reported an annualized return on average asset of 2.8% and annualized return on average equity of 12.6% on third quarter FY25, up by 0.5% and 2.8% quarter-on-quarter respectively. We expect this to continue to improve going forward. As regards technology, our technology initiative, including our in-house developed LOS, FlexCube, LMS, Pragati Sales app for customer onboarding, Collect Express app for managing collections, and Capri Grahak app for customer engagement are now extensively used by our sales and collections staff for managing the customer loan journey and end-to-end digitally, and is helping them further improve their efficiency and productivity. We continue to refine our data science-based business rule engine and underwriting scorecard, which will help us with better customer risk profiling and selection and offer risk-based pricing, thus improving our login to sanction ratio. This, in combination with our detailed collection dashboard for real-time monitoring and AI/ML models for identifying early delinquencies, will help us monitor our collection efficiency and asset quality. Lastly, our focus on real-time system and driving improvement in that, enabling us to meet our customer expectation faster through hassle-free and timely disbursement digitally. As regards ESG, Capri Global has established a robust ESG framework, aligning our policies with international standards and ESG guidelines. During the quarter, we also secured S&P Global Corporate Social Sustainability Assessment score of 49, exceeding the industry average of 30. On the financial inclusion parameter, we secured a score of 75, ranking us in the 99th percentile of the industry. Additionally, we published our business impact report, Echoes of Progress, highlighting our achievement in financial inclusion and sustainable growth. With that, I conclude my opening remark. We shall now take questions.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use their handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Satya Prakash Pandey from Haitong Securities. Please go ahead.
Hi, am I audible?
Yes, please go ahead.
Yeah. So my question is, the MSME AUM presented includes small business loan and micro loan. Could you provide a detailed breakdown of this AUM? Additionally, why has the MSME loan book not grown at the same pace as other segments? what measures are being planned to enhance its growth? Yeah, this is my question.
So, as regards this, our MSME, which comprises of MSME secured by collateral, small business loan, and also micro lab. So, small micro lab is only 157 crore, small business loan is about 42 crore, and MSME is about 4,769 crore rupees. This segment will start showing better growth in next year because we will be adding more branches here, and our micro lab, which is now 70 branches, will also start adding the numbers. So combination of both, addition of the branches and more focus on micro lab, but now going forward in terms of the growth, and the growth will be back in MSME segment also. We will start showing the growth next year onwards.
Okay, thank you. That's really helpful. Thank you. That's all.
Thank you. The next question comes from the line of Kushagra Goel from CLSA. Please go ahead.
Hi team, thanks for taking my question. Hello.
Yes, you're audible, please. Go ahead.
Yeah, so congrats on a good set of numbers. So I have two questions. One is just around your gold loan portfolio. So I'm seeing that the LTV is quite high, around 71-72%. So just wanted your thoughts regarding this. Is that a concern area, and what happens if in case gold loan prices drop, right? So if you could just give some color regarding that.
So gold loan portfolio, if you see the maximum permissible LTV is allowed 75%, and the competition also, all the LTV in the range of 71 to 75 only. Being gold is very liquid, I think these are very healthy levels of the LTV level, and even with the auctions and the NPA cases, we are able to recover fully. So these are very safe LTV levels, and across industry, everybody is operating these range.
Okay, sure. And my second question is regarding your borrowing. So can you just tell us what is the mix of fixed and floating rate borrowing? Also, if you could share your expectations as to how cost of funds will move in the next 3-4 quarters, and if there are any plans to diversify your borrowing. That's all.
All the borrowings except less than 5%, all the borrowings are on the floating basis. So and similarly, we are able to pass on any floating rate increase also to our customers. So our borrowings are by and large are in floating basis.
Okay. And do you expect them to have topped out in this quarter, or how do you see that moving?
We expect now interest rate cycle should remain, not go up. At the best, it might remain here for some time before it starts falling down again. But we don't expect the interest rate to go up.
Got it. Okay. Thank you.
Thank you. The next question comes from the line of Akshat Maniyar from Anand Rathi. Please go ahead.
Hello. Hi, sir. Thanks for the opportunity. Am I audible?
Yes.
Yes, sir. So my first question was on the lines of co-lending AUM. So what are your expectations going forward, especially it's seeing very good growth momentum? And what are the current structure arrangements of the co-lending that you have with the banks?
So we have co-lending partnership for all our three products: MSME, affordable housing, and the gold loan. And we are working with almost 9 banks where different products are partnered with them. Currently, about 18% AUM is under co-lending, and we should be able to maintain at that level. So co-lending will be in the range of about 18-20% kind of going forward as well. And banks are quite comfortable, so I think these limits we keep getting. We will see whether we can increase a slight bit, but even though these are very healthy level, if we can maintain it, conserve our capital, and our ROE is very, very high then in the co-lending segments.
Okay, sir. And my second question will be on the LAP segment that you just entered. So what are your key takeaways from this segment, and how do you plan to use it to basically broaden into the rural areas?
So there are two aspects of it. One, we launched 70 branches to start the micro lab because we are already doing MSME. The next level of expansion will our existing MSME branches, which are in the range of about 150 plus. Within that, we'll identify which are the branches we can start the co-lending at this micro lab also. So those branches, we just need to put the team and we'll save the cost there. So next April onwards, we are going to make a plan to start micro lab those branches. Besides other expansion in the micro lab, the advantage here is the yield is good, and within our ecosystem of overall supervisory level technology in place, cost basis, cost income ratio, it will be much better. Cost will be lower when we combine it with our existing MSME branches. So overall, it will fit into our scheme of things of the collateral lending to those customers who are not serviced by the bank. So we believe that this will be next 4 to 5 years will give us a good growth and also a high yield product along with the security.
Sir, lastly, if you could provide some insight on the competitive intensity and the macro environment that we are seeing a slowdown in the sector.
So if we see competition-wise, I think retail lending business will always have a competition. It had a competition yesterday. It is going to be tomorrow also. But this will drive on efficiency, operational efficiency coupled with the backed by technology and data science capabilities. And that is where we are investing. Only way to create the difference is how do we are able to achieve the better turnaround time, how do we are able to predict the better asset quality, how do we automate the lot of processes so we reduce the dependence on manpower, and also requirement of the people are gone down, productivity is higher. So with all these measures, I think within the competition also, we should be able to do well. If you see our trend, our growth is coming, and now quarter after quarter, if our cost income ratio goes down, you will see significant upstick in the ROE as well.
Okay, sir. Thanks for taking my question.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and 1. The next question comes from the line of Sohail from ULJK Group Financial Services. Please go ahead.
Good afternoon, everyone. Thank you for this opportunity. And I wanted to ask a question about what's happening at the ground level with the loan collection officers. Like, perhaps you could give some light on the attrition rate over there. Hello, am I audible?
Yes. So your question is related to the attrition in the team member of the collection team. So our collection team is quite stable in the sense on the ground, and because we have a good collection efficiency, good technology, and also the incentive plan, so it is less than 20%.
20%, I see. And I had another question regarding the construction finance book. So lately we have seen a huge growth in this segment. But previously we had faced a lot of defaults in this segment. And any particular steps you are taking to see this from happening again?
First of all, our construction finance is also done in a very retail way. Our average ticket size is 13 crore on a disbursement basis. And if you see our 3,700 crore portfolio is spread across 275 plus customers. It is not that we are giving 200, 300 crore rupees sanction. Most of the sanctions are less than 25 crore rupees. So these are smaller projects. Plus, in any case, real estate sector is doing well. Demand of housing is doing well. So we are seeing that sales are happening, and this segment is offering a low operating cost, a good profitability model. Now it's more than 12 years we are doing it, and even including the few write-off, our yield is very, very high, even though we account those losses. And hardly we have seen any delinquency. Collectively, in last 10, 12 years, we don't have seen the NPA more than 250 crore rupees, when we would have lent more than 12,000 crore rupees. So it is a very strong, stable team we have, and very deep ground understanding we have.
Perfect. That answers my question. Thank you.
Thank you. The next question comes from the line of Shalin Kapadia from IIFL. Please go ahead.
Hi, sir. Thank you for taking my question. So I only have one question. So we have heard from some of the competitors that they have started offering gold loans as EMI-based product with monthly EMIs. So is this something that you have also heard from regulators and is mandatory to apply? And also, if it is so, then how does it impact your growth or asset quality? Thank you.
So gold loan always have various schemes, including monthly repayment. So that is not something new. Neither there is any direction from regulator how our scheme. Regulator never say what should be your product. Regulator always say your compliance are A, B, C, D, you do it. How you divide your product, they don't guide us. So there is no instruction or circular on that as such.
Okay. Thank you, sir.
Thank you. The next question comes from the line of Rohit Shinde from Market Memories Wealth Advisors Private. Please go ahead.
Good afternoon, Rajesh Sharmaji. Good afternoon, Team Capri Global. Am I audible?
Yes, sir.
Okay. So, sir, my first question is, with a target of 30,000 crore AUM by FY27, what strategic initiatives are being prioritized to achieve this milestone? Can you share your guidance for asset quality and profitability as well? And which segment or geographies do you expect to drive growth in the near term?
So there is no that we are not focusing growth without and mindful about the asset quality. Asset quality, we intend to keep net NPA not more than 1%, and that the philosophy will continue to do. As regards the growth, from where it will come, the growth will continue to come from our existing segment of gold loan, MSME, micro lab, construction finance, affordable housing. Now for the further growth, we'll add few more branches, and with that, I think from 20,000 to 30,000 crore reaching, it should not take us a longer time. You can guess the kind of growth we are growing. It should be achievable. More than that, market offer that opportunity. There is a huge gap still there, and there is a big addressable target market exists in these segments.
Yeah. Sir, the second question is, as you transition towards becoming a technology-driven NBFC, can you share some recent advancements or digital initiatives aimed at improving customer experience, and streamlining operations? How is technology being utilized to expand your reach into rural and underserved markets, sir?
So I wanted to say that we are indeed a technology-led NBFC, while we operate in the segment which are in an informal segment, but our all processes are digitized and automated. So even in the gold loan, I just want to take 2 minutes. When the customer walk in our branch, he has to just bring the gold ornaments, and no paperwork is required. He is onboarded with his Aadhaar, OTP or face recognition. His PAN is verified, and once he offers the ornament, we do the weight of the ornament and check the purity, ask the customer to download our app, and customer is given the colored photograph through the app of its ornament along with the weight and the most important terms and conditions, including rate of interest, etc. Once he say he is agreeable, whatever scheme he wanted to choose in, we send in the OTP-based agreement, which is signed through OTP, and then amount is disbursed in his bank account or the the payment wallet or wherever you want. So there's no zero paperwork involved even in a 30,000 rupee loan taken by a person who don't know how to sign. So that way we have gone very deeply, and because of this automation across affordable housing, MSME and everything, our growth is doing better. We are doing better than the competition. Plus, our data analytics team is able to now predict the customer behavior in terms of the not only for the repayment but also what kind of a customer target in which category we should service. So definitely technology is the way forward, and this is not a one time, this is an ongoing basis. We have set up a tech center which is in Gurgaon. We have 125 plus engineers and 25 data scientists. And our data scientists are across Bangalore, Pune, Bombay and Delhi. So we are building that app, and it's going to be a regular feature. This is not one time. So we keep enhancing our offering for our team and our customer. And going forward, our turnaround time, which has come down in all the segments, will continue to outperform the competition, as well as it will improve the productivity, thereby bringing our cost to income ratio much lower. It is sign of better productivity.
And sir, in your goal to develop a 1,000 crore loan book in rooftop solar financing, could you elaborate on your collaboration with Credit Fair, which we did previously, sir? And how will this partnership enhance the speed of loan approvals, and disbursements within the solar financing sector?
So 1,000 crore AUM is not the target for 1 year. 1,000 crore target will be in the period of next 4 years or so, and it will be governed by the government subsidy scheme. So far government subsidy scheme will remain. There will be a strong demand for this product. Having government focus on the renewable energy, and where the subsidy is up to 75%, I think there is a great demand here. We have now launched the pilot product, and now we will scale this in the coming year, and we will see how fast this grows. So this is a part of the FSME in any case.
And so finally, a small question is regarding your advertising and marketing expenses. So what was the budget you had for this fiscal year, and how much is it remaining? And is there any going ahead for the next few months or next year? Any basically color you can throw on the advertising and marketing expenses? Hello?
Yes.
Just give us a minute.
Sorry. Extremely sorry.
So we have a budget of about 15 crore rupees for marketing, which comprises of radio, which comprises of hoarding, which comprises of newspaper, which comprises of the media. So combination of this 15 crore rupees is our budget, and till 9 months we already spend about close to 10 crore rupees.
Okay. Thank you very much, sir, and wish you all the best.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and 1. The next question comes from the line of Dr. Pradeep Kaushal from Royal Global University. Please go ahead.
Hi, good afternoon to the panel. Hello.
Yeah, good afternoon, please. Go ahead.
Yes. So in the beginning of your the presentation, you told that you are going to focus less on the opening the branches. Rather, you will focus more on the business. So can you elaborate this particular point you made in the beginning?
So now we have 1,066 branches. Our branch expansion will happen across MSME, affordable housing, gold loan, and micro lab. And when you want to grow, the growth will come, the growth from existing branches and also entering the newer market. So next year plan, will plan by March, and then from the June onwards, we'll start adding the branches. So far, we are not firmed up how many exact branches will be opening, but definitely about 100 to 150 branches we intend to open, but that plan yet to be firmed up in exact numbers.
So what is suppose, sir, from the words spoken by you just now, that you are going to open maybe 100 to 200 branches per year in the coming years?
So next year, yes. Next year we are going to open anything between 100 to 100, but we make our budget in the month of February until mid-March we finalize. And we keep our meeting with all the business heads internally and go to the board for that. So that exercise is still pending to arrive at the exact number. But yes, every year if you see our past track record, we kept adding branches year after year.
Okay. That's great. That sounds great. And I want to know that what is the reason behind such a kind of a strategy, and how it is going to impact the profitability in the future?
So branches, when we open, we have to grow, then we have to add the more branches and enter the newer markets. And the branches, depending on product to product, initially they take some time to break even. Some MSME branches take 3 to 6 months, and gold loan take about 12 to 15 months. And after they start contributing, and they start adding to the profit.
Okay. Thank you so much. Thanks for the answer.
Thank you. Ladies and gentlemen, a reminder, if you wish to ask a question, please press star and 1. As there are no further questions, I now hand the conference over to the management for their closing comments.
So as we look ahead, we see significant market potential across all our business segments, MSME, Micro LAP, housing, gold loan, construction finance, and see our continue to deliver industry outperforming growth while expanding our spreads. We will keep investing in artificial intelligence and data science capabilities and empower our sales staff with the latest digital app, which will help them serve our customer faster and with better cost efficiency. Given all our book is secured and granular, we feel quite comfortable of keeping our credit costs and asset quality under control. On the liability front, we continue to deepen our lender relationship and feel comfortably of securing additional credit lines with our better pricing. We remain confident of achieving our earlier guidance of rupees 30,000 crore AUM by FY27 and delivering mid-teen ROE by then. Thank you, and we look forward to seeing you all again in fourth quarter FY25 results call. Thank you.
Thank you. On behalf of Capri Global Capital Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.